Happy New Year, everyone. Mike Tedeschi, Wealth Management Advisor with Perspective Wealth Planning. In this week's market breakdown video, we're going to take a look at the four major U.S. indexes. We're going to take a look at the U.S. dollar. We're also going to take a look at commodities, emerging markets. We got a lot to cover here, so let's jump right into it. First and foremost, we have a chart of the S&P 500 up on the screen, and as you guys can see, we made our breakout back at about 3,600, a month or so back, and have continued to head higher. We've had a couple of days of weakness. The beginning of this year started with a sell-off, but we immediately put in a new high the following session. To me, it was more of a rotation, and we'll talk about that when we take a look at the other indexes. Let's go right now to the Nasdaq, and as you can see, the Nasdaq actually started off the year the worst of the major indexes, opening and closing about 2% lower than where it started the day, still putting in higher lows, holding its main level of support. None of the areas that we've talked about in the past have changed. But when we take a look in at the Russell, we get a very, very different story. The Russell had a monster day yesterday, up 5% at one point during the day. Clean breakout of the range we put in over the last 2 weeks. The sell-off at the beginning of this year didn't breach this major support zone, and this has been an absolute monster since making the breakout back in November. And we talked about this a lot. It had taken a long time for the Russell to make a new high. It had been all the way back to 2018 before it had actually made a new high. And now this is looking like a very clean, clear, multi-year breakout that's taking place. And we subsequently have seen a lot of rotation into mid and small caps here over the last month or so, and less in the larger tech names. The names that had been essentially run so hard from the beginning and the middle portion of last year have really gone nowhere. The Nasdaq has gone nowhere since essentially back in the beginning of September. From the beginning of September, it's up about 1.5%. And again, if we pull back up and take a look at the Russell in that time frame, it is up about 33%. So we have highlighted this week after week after week, but that trend continues, and it started here in the new year. Now, the next chart I want to take a look at is the Dow. The Dow finally making a nice push yesterday as well. So yesterday it finished up about 2%, even in the face of everything that happened in the capital yesterday. When we take a look at this chart, we had our breakout back in November. This has not run nearly as far. It's only up 4.5% from that breakout spot, so not nearly what we're seeing there out of the Russell. But we finally got the new high there out of the Dow in the last couple of weeks, and we are following through. I want to take a look at some individual sectors that we haven't talked about here in a while. What I've got up here is the banking index, and we can take a look, and we are right back to essentially where we've started that collapse back last February with a huge start to the year, a big push here to the upside yesterday as well. Now starting to run into resistance, but we've seen some individual banks make new all-time highs, so there's definitely some money continuing to flow into this space, which typically tends to bode well for the overall economy when the financials are doing well. You can see here we just opened up Thursday morning, and we are actually opening up above the line that I just drew on the chart. Our really important level to pay attention to is the full gap fill back to 107 on this chart. Next, I want to check in with the transports. Transports are approaching another high here. It's been basing here over the last month or so up near the breakout zone, so move back up over that 12,900 zone would be a good sign here. Next, I want to take a look at the housing sector index. As you guys can see, we're pushing up near those highs. Still hanging around essentially that spot that we fell off a cliff from, again, back in February. That's been the midpoint here over the last couple of months. We're going to continue to watch this closely to see if we actually can get that next level breakout in play. Taking a look in next at the healthcare index, we made that breakout back in November. Continues to be a leadership area of this market, continuing to rock and roll higher. We'll continue to pay very close attention over here, but great action out of the healthcare space over the last month or so. And here we are with the green energy index. It continues to be an absolute monster after it looks like the Democrats are going to win the 2 seats from the Georgia runoff. We saw a higher explosion once again out of the green energy space off of that idea of a Green New Deal. That's continuing to be a very, very hot space and has been for the last year or so. So we're going to continue to watch what goes on there. Well, let's jump now and take a look at the U.S. dollar. We continue to see weakness out of the U.S. dollar. Let me clear all the drawings off and give you guys a completely fresh chart. We're going to back this thing out here to a monthly basis, and we are right at that key kind of point down here. This 87 to 89 zone has been key going all the way back to 2007, and that's right where we're at. This would be a big shock to everybody. I think if the U.S. dollar had a very strong year, this is one of the areas that we need to pay attention to for that potential surprise in 2021. Logically, it would make sense with all the printing and everything that we continue to do from a central banking standpoint that we would continue to see weakness out of the dollar, but we are at a major multi-decade support zone. So what happens here is really, really important, and that will have an impact all over the place. We take a look in at the emerging markets. They have finally made that clean breakout here. This is a monthly chart, guys. We're made that all-time high there. We've still seen capital continuing to flow into those emerging markets. And part of the reason, as we know, when oil does well, the emerging markets tend to do well. There are a lot of oil-based economies out there. When we take a look at this right here, the main level that we've been watching was this 49 to 50 zone. We're over that 50 level right now in on oil. The next level we want to watch is that 55, and then we come up and we take a look at that 65 zone. So this has been a nice continual grind higher as we have continued to see. When we take a look at other commodities, we take a look in at gold. Gold failed right at that 1960 resistance point where it got smacked down back in November after a very strong start to the year. It is basically flat for the year at the moment, slightly up. This was not this zone where the bulls wanted to see failure. Really wanted to get back up over that 1960 zone to see if we could get that push towards that all-time high. It did fail right where you wouldn't want to see it from the bulls' perspective, but still holding over that key 1900 level. Silver, similar, been stronger than gold as of late. We've talked about this a bunch. It has not made a new low since back in September. This is a higher low, and it's more at a sideways range, whereas gold is more facing in a downward channel. Over 28 is really the big key inside of silver. We'll continue to pay attention there. Platinum is acting well up over that 1040 zone, continues to rock and roll higher, both a precious metal and an industrial metal, one that's certainly worth watching. Palladium still has not gone anywhere over that 2500 zone from back in the beginning of the year, really trading in that nice sideways range here over the last couple of months. It's one that we're going to continue to watch at that 2500 zone. Copper continues to be a huge push higher here. We are seeing a lot of action out of the metal and mining space, not just in the precious metal side of things, but in the industrial metal side of things. Copper names have been moving extremely well. Steel names have been moving extremely well as we are seeing those kind of signs of inflation. Some of these commodity areas that have been left for dead over the last few years are probably going to start coming into play. When we look at the commodity index as a whole, right, it's had a really strong month here over the last month or so. Really got beat up obviously earlier this year and has not put in that high up over the beginning of last year's open up at around that 200 zone. This is again all the total commodities, so this is including your soft commodities, your hard commodities, everything in here as a basket. There are still a ways to go. This is an area that we really like paying attention to for this year for that potential push higher, so to speak, if inflation still continues on. Now, when we look at all of the hard, soft commodities, we're looking at the different metals and everything. One of the things we want to pay attention to is what's going on with manufacturing in and of itself, right? Are those actual raw materials subsequently being used in the manufacturing of things? And that's what we want to pay attention to. And as we can see, the ISM manufacturing everybody's finally back up over that 60 zone for the first time in 27 months. So manufacturing is starting to make that comeback after that huge crush over the course of last year. This is something that's going to bode well for the indexes, the commodities as a whole, and this is something we want to continue to pay attention to. If manufacturing is coming back to life, that's signs that the economy is starting to rock and roll once again, and that is going to be good all around. So this is something we will continue to pay attention to this year as well. That's all I wanted to cover in today's video. Markets still continuing to make those new all-time highs. I know I hear a lot of people talking about valuations and how they're kind of out of control, and we've had that conversation before. That only matters. It doesn't matter until it matters, and it may not for years. We follow technicals here. We pay attention to what the indexes are telling us. We pay attention to what price is telling us, and price is continuing to tell us that we are grinding and rock and rolling higher. So continue to take a look at those areas of strength and position yourselves accordingly. As always, if you guys want to reach out to me, you certainly can. I'm Tedeschi at PerspectiveWealthPlanning.com. You can give me a call at 814-580-9881. I will see you guys next week. Have yourselves a fantastic year. Take care.